Dinshaw Irani is also ready, and let's say hello and good morning to him. Is he joining us with an umbrella in his hand? No, 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 no. You're dry. You've reached office. No rains.
Yeah.
Half my office folks are struggling today. How did you manage? Please tell us the secret. No
I stay
umbrella,
8 minutes
completely
away.
dry. Sorry?
I stay 8 minutes away from my office, so not a problem.
The trick to survival in Mumbai,
Yes,
right?
stay
Live
close to
close to
office.
work.
Stay close to office. Okay. Good job, Dinshaw. I must say that. I mean, it's so good to see that you managed on time without an umbrella and you're completely dry.
Yes.
It's been pouring and pouring. It's been pouring gains in the market. Do you think this trend will continue?
Yeah, thank you, Nikhil, for having me on your show, and a very good morning to you, your team, and the viewers. So I heard you before I came on the show. I logged in earlier. You sound very bearish. Never be so bearish on India. That's what we
All I'm
believe.
saying is that the tree could shake, so some fruits will fall. Now, when the tree is shaking, does not mean the trend changes, but maybe it's time to enjoy some ripe fruits. Cherish them.
Yeah, actually, I agree. I mean, there's been pockets of real outperformance which have been running away as such, and probably you can take some money off the table there. But I don't think I mean, looking at what we are seeing right now, in fact, you refer to that Kotak report, and if you just before I came in, you refer to that report. If you see a bit more deeper into that report, there, the valuation that they're talking about for the market, I mean, they've taken a 24-year average and said that the market looks very expensive. But frankly, I mean, I don't think the last 24 years are really representative of what the markets are. If you look at the valuations after the demon period, which is from 17 onwards, we are there. We are at some 90, just shy of 20 as such. And I think the average is some 19 odd. So we are somewhere there only. And I think that's the kind of representation that you're looking at. And frankly, I mean, look at the flows. Uh, we've done almost 12 billion in the last 2.5 months, 3.5 months or so. But the fact is that India is standing out today, not only in the region, thanks to what's happening in China. In fact, China is nowadays being related to the late 80s of Japan. I mean, they're talking about a property bubble, which may burst, and China may go sideways. And frankly, I mean, the opening trade never worked out in China. So, fairly unhappy with 1/3 of the market which is commanded by China. I mean, as in I'm talking about the flows in the emerging Asia region. So that, and plus you look at the other markets also in the region, they're not doing too well. In fact, India stands out. In the last 3 months, we're the best performing market in the region, probably the third best performing in the world. And I don't see that trend reversing, frankly, because of the intrinsic strength that India has to offer the world as such. And obviously, I mean, the kind of outperformance which has happened in the last 3 months or so, maybe there'll be a breather, but I don't see a big correction coming.
Dinshaw, so what could be the trigger now?
For the markets to move up, you're saying?
Yes.
Okay, so basically, I believe that one is, as I said, that maybe there'll be a breather on the side on going sideways, but I mean, trigger as in you're still seeing flows coming in. I don't think there's a reversal though in the flows, and plus, I mean, the quarterly numbers which are coming in, I don't think the probably there'll be pockets of again within the numbers there'll be pockets where there'll be disappointment because I don't think people have still discounted the fact that IT will go through the worst quarter reported thus far, and I think there'll be some disappointment there as such. But others like banking and all, I don't see any problems there. Financials have done fairly well. Consumption continues to do well. There'll be some discretionary consumption spends which have taken a backseat, so that may have an impact. But frankly, I mean, you don't need big triggers in the market. You just need the world to stabilize, and if that happens, that's enough for India to continue their outperformance per se.
Let's look at the market setup. Everyone is excited to own financials, and financials have done rather well. Banks do well when interest rates are moving higher, at least in the first phase, because they get benefits of lower deposits, higher credit growth. How do you see banks moving now that interest rates have peaked out? Because interest rate movement in last 12 months has been the biggest moving part.
Right. So, Nikunj, actually, we've been also breaking our brains on this, but we were pleasantly surprised by the way credit started moving. And actually, that is what is needed. Let's remember that there have been 3 cycles of private capex which have been postponed. initially for the elections, then came demon, and then obviously came COVID. So you're seeing this three cycles working out. If consumption continues the way it is, I think these cycles will work out perfectly for the banks per se, because they're not only going to fund the consumption, but they're also going to fund the capex which is needed to take care of this consumption growth. So banks will, in fact, the NIMs that you talked about, we also felt that they've peaked out as such. And frankly, I mean, the March numbers were a pleasant surprise because they didn't peak out. In fact, some of the banks reported in further expansion in NIMs per se. But our feel is that they more or less peaked out. Maybe there'll be some inversion there as such. But the fact is that if credit growth picks up, then we are home and dry, because that's where there's the other pillar of growth for the banks as such. And if that kicks in, I think we'll be more or less taken care of. And in fact, just remember that when actual businesses grow, that's, and obviously credit growth is an intrinsic part of the business for these guys, then that's when the re-rating happens as such. So I don't think we have a concern on the banks front.
Dinshaw, but what do you have to say about the narrow nature of this rally? Your traditional heavyweights not participating. It's a newer leg of names which is actually taking the market just about close to an all-time peak.
So Aisha, I don't know why you call it a rally, because we've seen year to date only 2.7% growth or 3% outgrowth in Nifty, right? We getting carried away by the last 3 months where the run has been around 11 odd percent as such. So I think it's a matter of time before some heavyweights may kick in. I don't, obviously IT won't be a part of that pack as such, because I think they're having a serious problem going forward as such. So that won't be the case. But obviously there'll be likes of other, which may just kick in at some point in time, because ultimately what markets are, it's a race. You need a set of leaders to take over the baton whenever one lags. So there'll be pockets which will come up as such. So I don't see any problems here.
Dinshaw, hi, morning. And if you've been listening into Nikunj, I'm sure you heard the ITC interview as well. Lots of key takeaways, but among that being talking about, the kind of potential for FMCG as a whole in the country. What would be, your outlook in terms of FMCG and where the potential lies?
So, Aman, the point is that FMCG per se, I don't think we are that keen on, though we own ITC, by the way, but it's not for the FMCG business. It was mainly for the tobacco business. We got into ITC because it's a inflation hedge, plus obviously the fact that it was an opening trade, because the smokers normally don't smoke at home. When the office is open, they come to office and start smoking. So that was a perfect trade that worked out for us in a big way as such. But FMCG part, I don't think we are that keen, frankly, because ultimately, when you're looking at valuations, they have to be in sync with the growth rates, right? They have to be directly, normally they are directly proportional to growth rates. So if your growth rates are, earnings growth are high, valuations will be high, right? But in the case of FMCG, it's the other way around. The earnings growth are not that high. I mean, they're probably at best early double digits, like 10, 11% odd as such. And the valuations are at peak levels. So we're not that keen. And frankly, I mean, if the economy picks up, we're not going to see people taking bath 3 times a day or 4 times a day, right? So there's a limit to which you can give valuations to these stocks. So we are not too keen on the FMCG space.
Gives you the conviction to still hold on to, let's say, some of your traditional favorites, Vedant Fashion, Indian Hotels, Westlife, Titan. By any yardstick, these are expensive.
Yeah, but because you rightly put it, so basically, I mean, okay, let me talk about these sectors per se as such. And frankly, I mean, we're talking about discretionary spends out, the ones which you took names of. So we're also cognizant of the fact that the valuations have run up quite a bit in most of these counters as such. So we're being careful here. I don't think we're chasing these counters. But the fact is that when you build a portfolio, you're looking at the overall portfolio rather than looking at individual stocks where you know that there's an alpha built in, right? You know that these alpha will kick in as and when the economy picks up as such. There'll be times when they'll be lagging as such. Again, as I said, you're running a relay race, right? So overall, our peg for our portfolio today is less than probably 0.6 times or so. So we're more or less comfortable with the way we've built our portfolio. And obviously, there'll be these kind of spicy stocks, if you may call them, as which may add some flavor to the portfolio going forward. And I don't think we are very concerned about the hotel space. I think that's got a long way to go. But the other stocks that you named, obviously the valuations are a bit of a stretch, but again, the growth rates are fairly high.
Okay, thanks so much then for sharing with us your outlook, Dinshaw. Good to have you on ET Now as always. All right, and here's